All right, hello everyone. This is Seewing Yee from the Yee Real Estate Network. I'd like to take this opportunity to again to share this presentation with my very good friend and business partner, Mr. Glenn Plantone from Las Vegas. And Glenn and I have been knowing each other for more than 10 years, ever since the early 2000s, and we have done deals in the past where some of my investors have purchased property in his neighborhood in Las Vegas back in the early days, like 6, 7 years ago. They have done very well, obviously. And Glenn has right now his focus is on flips, and he has a tremendous track record of done hundreds and hundreds of deals over the past 8 years, and virtually all of them has been successful and make our client investors money. And recently, he has helped several of our members of our network to achieve good results in flipping, and they are doing more deals as we move along. So we are gaining some momentum. So once again, Glenn Plantone from Las Vegas, he's going to talk about the several opportunities for my investors, and so I'm gonna take it away and have him share with you what kind of excitement he has going on with some unique flips that he's doing. So without further ado, Glenn, take it away. It's all yours.
Fantastic. Thank you, Seewing. I appreciate the introduction. Yeah, we have done a lot of deals over the years, and that's great. You made a comment that I'm going to bring up right off the bat, which I think is a good thing to say. You know, every deal that I've done has not been a success. I've actually one of the few investors that will admit that I've lost money on some deals. That's the bad news for me. But, you know, some of those I might lose 5 or 10. It's not like it's a big number. I'll get deals where I've made as much as 300,000 on one deal. The point being is my investors' money is always secured and it's always guaranteed, and they always get 100% of their investment back and 100% of their guarantee of return. And the reason why I can do that is because, again, I secure them against a property that I buy generally at a wholesale level under market value. I put money into fixing it, my own money, raises the value, and then I sell it. Once in a while, the market conditions, or I made a mistake on the comparable analysis or something, it could be that that project didn't work out. But because I put my own money into it, let's say I bought a property for 100, use the investor's money, I put in 30 of my own money, and I ended up selling it for 130. Well, then I lose money because I'll get my 30 back. I have to pay the investor 100. I have to pay the interest, and let's say it turned out to be 5,000 for the investor. That's 135, and I only sold it for 130, less some closing costs, less this and that, and holding costs. I actually lost money. Very rarely that happens, but it does happen. And I've done over 400 deals with investors. In every case, investors always got 100% of their investment back and their guarantee of return. So let's start out with that because that's a really positive note. Typically, over the last probably 10 years I've been doing this, I've actually been paying anywhere from 6 to 12% interest. For the most part, it's been 8 to 10% interest. That's where most of the deals have been done. But let's use 10% as an example just to go through. I've done over 350 flips. Now, when I say flips, that would be a property in Vegas, let's say, that I buy, and I'll walk through the numbers similar to what I just talked about. I'll buy a house for 100,000. I'll go ahead and use the investor's money for 100 to go against the property. They're secured against the property with a first trust deed position, and then I'll put my own money into rehabbing. Let's say in this case it was 20,000 to rehab. So I put my own 20 into rehabbing, bought it for 100 with the investor's money, and then I sell it for 160. Well, minus my expenses, minus this, minus that, I might net 145, minus the 120, 100 back to the investor, 20 for my rehab money. I've got, maybe 25,000 in profit. Of course, I pay the interest to the investor. Let's call that 5 just for conversation's sake. So I end up making $20,000. That's a typical scenario that I've done over and over and over again. And the reason why I can do that is because I'm very good at finding properties below market value. And that's my job, is to find wholesale deals, whether it's a foreclosure, whether it's a short sale, whether it's a probate. We're doing a lot of probate deals right now. Whether it's a property that we just bought and paid retail for but we added value to it. In other words, we do a lot of these in North Carolina. I've done about 50 of my flips in North Carolina. My brother lives back there in the Charlotte area, and we'll buy a little bungalow for, let's say, 1,000 square foot, and then we'll tear it down to the studs. We'll go through the permitting process, and we'll add 500 to 1,000 square foot. But by our building cost of, let's say, being $80 a square foot, and our reselling cost being $150 a square foot, it's almost an instant arbitrage situation of adding equity to the property. We might spend $150 to buy the property. We might spend $150 to rehab the property, but we'll sell it for, $450,000. And so we do a lot of those. But in essence, there's really three things that I want to talk about today, and I don't want to get too far ahead, but let's mention those three, and then we'll talk about each one. The first one is what I just described, which is the flipping, the 350 or so flips that I've done. So we'll discuss that in a little more detail. The second is commercial. And I mentioned, and Seewing and I have done a seminar or a webinar before on commercial. And I started doing commercial a couple of years ago, and I've done about 15 to 20 deals in commercial, and they've all been very successful. I've taken the same skills that I learned on the level of doing single families, and I've now doing them in the commercial arena. So we'll talk about that briefly. And then the third one I want to talk about is one of the gentlemen that I've worked with for over 10 years that's not Seewing, and he's got 4 different projects that he's put together over the last several years and done extremely well in all 4 of them. And I'm in the process of helping him raise some capital on one of his projects that's up in McMinnville, Oregon. And we'll talk a little bit about that too. So I briefly talked about number one, and just to reiterate, I'm open for investors that have anywhere from as low as the 50,000 level to as high as, I'd say, 500,000. I don't do a lot of deals in the 500 range. Vegas prices have gone up a lot. Most of the projects I'm buying are at the $100,000 to $200,000 range. I'm doing a couple deals right now with a couple folks that were on the last webinar, Seewing, as you know, James and Feng. And Feng's already been in and out of one deal, and James, about 3/4 of the way through his deal, will be hitting the market in about a month, and we'll sell that one. And then he gets his guarantee of return back, of course, plus his interest. So I'm happy to work with your clients and do it over and over, and it builds credibility up also. But normally in this market, because prices have gone up so much, I'm looking at probably 100 minimum, 200 maximum. And again, I'll use that 200 to buy the property, and I'll put the rest of the money in from my own pocket for the rehab money. The money is generally wired to either myself or to title. We prepare in advance a note and a deed of trust. And then once the property is purchased, we record that note and deed of trust against the property. It secures the interest, the investment of the investor. And then when the property is sold, the investor, your investor, is the first one that gets paid off. He gets his return back, he gets his interest back, and whatever's left over comes to me. And that's the way we work it. And as I said, we're doing anywhere between 8 to 12% interest, depending upon what's going on. So I've got a few of those in Vegas that are coming up. I've got a couple of those in the Charlotte that we're doing. So if any investors have anywhere in that 50 to 200,000 range, let you know, and we can talk about that. So that pretty much covers that one. Any questions on that one, Seewing?
Glenn, I do have a quick question before you begin. Now, in addition to the secure interests that are secured by the real estate, does the investor with this upcoming deals you're doing, can they do any kind of additional equity participation above and beyond the interest that they're receiving?
It's a great question, and I'm glad you asked that. I was actually going to talk about that in the next segment, which is the commercial segment. So let me talk about it in commercial, and then we'll come back and talk about how it might work in the residential. Typically, I haven't done it much in the residential, but I'm thinking of doing it more if I get into the higher end properties, because if we get into the 3, 4, example, I've got a $400,000 property that looks very good at this point. It's a probate. And if I end up getting it, I'd be looking for one $400,000 investor, which is a lot of money to put in. And then I would either guarantee them, that 8 to 12% interest, or I might turn around and say, would you like to also be a partner? In other words, rather than me paying you interest on a monthly basis, why don't we defer the interest until the end? And instead, we'll give you a guarantee of interest, and we'll give you a percentage of ownership of the profit that we make. It could be 10, 20, 30%. And I've got a lot of investors that are very interested in that because they'll make more money doing it that way. They're in essence, a more secured position. And I don't have to worry about those ongoing costs of interest and some of the carrying costs that I have to incur. So that's a very viable opportunity that we may be doing in the future in some of the Vegas properties. So good stuff. Let's move on to number two. Number two is commercial. And commercial is the area that I have done very well with. Like I said, I've taken the same concept of going after properties, buying bank-owned properties. We haven't done any short sales yet in commercial, but we've done many bank-owned properties where we'll find a commercial property and we'll go out and ask the bank. We'll put an LOI, a letter of intent, for that property, and we'll go after it at I call it a stupid lowball offer. And I've got many properties in the $10 to $50 square foot range. We're knowing that it takes at least $100 to $150 a square foot to rebuild that building. That doesn't include the land. So if I can buy a property, I bought a bank last year for, I think it was about $20 a square foot. And I ended up selling it for double what I paid for, more than double what I paid for it. And I ended up making $300,000 for a property that I bought for $200,000. And I sold it to the bank across the street for $500,000 a month later. No commissions, just they didn't want another bank to occupy this bank that I bought. And so, and the bank that I was renting from me when I bought it, and that's the reason why I got such a good deal. If the bank was due to move out in a month, there would be no revenue on the property. So I took a little bit of a risk knowing that there'd be no revenue, but I also knew that I could probably rent it to another bank or I could repurpose it into another kind of building. And so by doing it that way, it worked out extremely well. So that being said, one of the things I'm doing, other than buying these buildings at low cost and going after foreclosures, is I'm doing some construction. I've got an agreement with some of the dollar stores where the dollar stores identify land. They'll come in and they will actually say, we will give you a 10-year lease on that land. And so I know going in, I'll tie up the land. Once it's tied up, then I'll go ahead and more or less put it under contract, and I don't have to close on it until I have to have that lease with the dollar store. Once the dollar store comes in with that 10-year lease with, in some cases, 4 to 6 5-year options, I have what's called a very, very viable lease, and I can go to a bank, and the bank will actually give me a loan to do the construction for the property. So the only thing I need to do is come up with the amount of money to buy the land so we own it free and clear, so we can go to the bank and then get that loan. So the opportunity for investors, and these land parcels have typically been between 200 and 500,000. So if an investor comes in with the 200 to 500,000 and we buy the land together, then we can go into a partnership agreement to where I'll go ahead and go on title. I'll go ahead and apply for the loan from the bank. The loan will come in, and once we get the loan and we pay for the construction, when we're done, we will sell the whole investment off as a triple net investment to an investor that's looking for a long-term investment. And by doing it that way, the investor is in a much better position because they're not only secured against the property, but they also have an ownership interest, an equity stake in the property. And that, again, can be anywhere from 10 to 30, 40%, depending upon what arrangement we work out, how much money's involved, the whole works. So I'm doing a little bit of construction. I'm doing a little bit of continuing to go after bank-owned properties at low prices. I had 3 last month that I almost went after. I was very close. It was 3 banks in the Midwest where I negotiated it down to $340,000. My target was $300,000, and I let it sit on the back burner because a lot of times if I don't get it, I'll just sit on it and I'll come back a month or 2 or 3 later, or they'll call me back and they'll finally match my number. So if I do get these 3 banks, then I'd be looking for an investor that comes in with $300,000 or 3 $100,000 investors. And then those investors can be secured against the property. Then I'll take those banks and I'll again repurpose them to another. It could be a cell store. It could be, a hair salon. It could be a restaurant. It could be one of the things we're doing a lot with is event centers, which I'll talk to in a minute. So it could be a number of different things. But by doing it that way, puts me in a very, very good position. I did this with a bank in Cleveland that I bought for $150,000 about a year and a half ago. And it took me about 6 months, but I found another bank to move in after the first bank moved out. And based on the bank moving in, the value of that property went from 150 up to $400,000. So now that the new bank is moving in, I can either refinance it and take my funders out, or I can sell it as a triple net investment. But either way, I win. Let's walk through two scenarios. If I sell it at 400, I'll pay off the 150 investors against it, and they'll get their guarantee of interest, and they'll get their money back, and they're ready to do another deal, which is great. Or I can refinance it with a bank. Now, if I refinance with a bank, I can go in and probably get $300,000 against it. So I pay off my $150,000 in funders. There's two of them, one at 100, one at 50. They're paid off. They're happy. I get $150,000 in my hand because I only owed 150. And so the extra 150 is refinanced money that comes from the bank directly to me, goes in my pocket. There's no tax consequence. And then I take that and I go do other things with it. But then I'll owe $300,000 on this property that's valued at $400,000. And I'll still have a positive cash flow because the amount of money that I'm paying from my mortgage, it's a triple net lease. So let's just give it a number and say it's $2,500. Well, the rent, let's call it $3,000, means I'll have a $500 positive cash flow. The bank that's renting pays the taxes, the insurance, and the maintenance. So I have no liability other than cashing a $500 check every month and still having $100,000 in equity in the property and having $150,000 in my pocket. So those are a couple of the ways we can work some of these deals out. So that's, in a nutshell, that's the two things I'm doing with commercial. I'm buying properties at low prices, and I'm building with leases set up. I've got a local developer here in Vegas that works with Enterprise Rent-A-Car, and they're looking to expand. So I'm also looking at some spots for mortuary, Enterprise Rent-A-Car. So if I find a spot, a piece of land or a building that works for them, then I go ahead and buy the land or the building, land in the building, and then I bring in the mortuary, I bring in Enterprise. They come in, they sign the long-term lease, and then it's the same scenario. I can go to a bank, I can get refinancing because I have a long-term lease. So there's a lot of play in this, and I'm happy that I started doing it a couple of years ago, and it's worked out very, very well for me. I bought a mortuary down in Florida for $355,000 that I'm selling for $700,000. I bought a bank, or not a bank, I'm sorry, it was a office building in Las Vegas, my first one 2 years ago, for $350,000 cash, and I sold it for $575,000 about 2 to 3 months later. I bought the bank I told you about that I refinanced. I bought the other bank that I bought for $2 and sold for $5. So I've done many of these. I bought a jail for $35,000 cash in an auction, and I sold it for double the price. Not a big play, but hey, you know, who's not going to walk away from $35,000? It's a nice profit. So that's the second part of the equation. Can you see my computer, Seewing?
Yes, I can.
I've got Evergreen on there.
Yes, I did.
Let me close this off real quick, and then we'll get into the Evergreen. I want to talk a little bit about that, and I'll just roll through it fairly quickly. Let me tell you a little bit about my friend Steve Downs. Steve is a serial entrepreneur that's opened up, you know, many successful companies over the years. He's a bit older than me. I think he's in his late 50s, maybe early 60s, but he's developed 4 concepts that I know of in the last 10 years that I've known Steve, and one of them is called The Falls. It's an event center. He's opened up about 15 of these. Generally what they are is about a 12 to 15,000 square foot structure where they hold weddings, they hold quinceañeras, they could hold a bar mitzvah, they could hold big meetings. They could have basketball games there because they've got the hardwood floors and the basketballs come out of the ceilings. But mostly they're used for weddings and they're used for larger meetings and functions and whatnot. And the advantage to this is that you can rent the whole hall out yourself for the whole day, and you can bring in your own food. You can bring in your own alcohol. You can bring in your own band. And the cost of a wedding doing it this way could turn out to be 10, 15 grand for the whole wedding versus you go to a hotel in Vegas. My son actually proposed to his girlfriend about 6 months ago, and they've been looking for a venue, and their numbers are coming in at $40,000 to $60,000 to do a wedding. And I wish that there was a Falls Event Center in town because we'd love to cut that down. You know, being the owner of a restaurant myself, we'd love to provide the food at cost. we'd love to be able, of course, I'd end up eating it because it's my son. But the point is, if it costs $5,000 for food, then that's it. If it costs, $1,000 for a band, if it costs, $3,000 for liquor, if it costs $2,000 to rent the hall for the day, you're looking at $10,000 altogether, or $12,000. It's much cheaper than going through a hotel. So the concept is very, very viable. He's got 14 to 15 of these right now, and he's got land for about 10 more that he's purchased, and they're doing these. He plans to go public eventually. There is a play outside of just the investment that we're going to talk about today, which I won't go into a lot of detail with, but I just wanted to share with you one of the I guess businesses that he's started over the last 10 years. The second one that I'm very excited about, because I'm a restaurant owner myself, I opened up my own restaurant about a year ago, and it was a very big struggle for the first year, putting the time and the energy into a restaurant. But we're actually going to break even this month. We had a very, very good month with our catering, and we should break even, which is phenomenal. And a lot of restaurants just don't make it through the first year, so we're excited about that. Well, his restaurant is called Even Stevens, and of course, you guys can Google this, and if you do, I'm sure you're going to see nothing but good accolades. What he's done with Even Stevens, he opened up about 3.5 years ago, and I was actually one of his original investors, where I invested with his company. So I invested $50,000. I got 50,000 shares, and the company, of course, plans to go public and do very well with. He's opened up 18 of these in the last 3.5 years, and they're profitable. They're doing very, very well. He plans to open up over 100 of them within a 5-year span. So he's got a very aggressive plan of attack, but he's doing very well with them. I've actually visited about 6 or 7 of them. I'll be going up to Oregon in about a couple of weeks, actually, for his annual shareholder meeting. I've been to all 5 of his annual shareholder meetings. He had one in St. George, Utah, one in Salt Lake City, one was in Sacramento a couple of years ago. And then last year they had the one down in Phoenix, Arizona. And at that one, I was able to see 4 or 5 of the event centers that they opened up. And also, not 4 or 5 event centers, I apologize. I mean, 2 or 3 of the event centers and 4 or 5 of the Even Stevens restaurants that they opened up. So I'm very familiar with the concept. It's a sandwich chain concept with very high quality, a lot of culture. They've done extremely well. They give away 1 sandwich for every sandwich they serve. They've got just a brilliant marketing strategy, and they've done really well. So Even Stevens, I'm very excited about where they're going, and I can see that going public someday. And my little investment of $50,000 literally go to a $5 million investment down the road. I really think that'll happen. The next that he's got is Evergreen, which is on the screen. I'll talk about that in a minute. The thing I want to talk about before I do, though, is his 4th concept, and that's going to be Steve's Hotel. He wants to do the same type of cause that he did with Even Stevens, where every time he sells a hotel room, he's able to give away a free room to a homeless person. How he figures this and does this, I'm not sure, but he's done very well. They've made over 1 million sandwiches with Even Stevens in the 3.5 years they've been involved, and they've given away over 1 million sandwiches through local partnerships and local charities. And he plans to do the same thing with Steve's Hotel. Now, the first Steve's Hotel, there's 2 of them, and they will be built on this Evergreen project that is up in McMinnville, Oregon, that I'm going to talk about in just a second. So I'm going to roll through the PowerPoint fairly quickly, just so you get an idea about it, and then we'll talk about the investment. So let's take a quick look at that. So Evergreen project, and this is phenomenal, but this is why he's able to do what he's doing. About a year ago, Steve was able to buy this campus, and it's over 200 acres. It's got, I forgot how many buildings, but it's got about 10 buildings. It's got 2 buildings that house aerospace museums. It's got a 747 you'll see in the background that's on top of a water park. He's got a Falls Event Center up there. He's got a chapel that'll seat 400 people for a wedding. He's got lots of land, plans to build a couple hotels up there, but phenomenal. He ended up buying this project that was actually valued at over $100 million. He bought it out of bankruptcy. It was an estate deal where the gentleman who owned it, used to own Evergreen Airlines, had died. His son was killed in a plane crash or a car crash years ago. And once his son died, the dream of this complex kind of died with it. He ended up dying, and the whole project was sold off. he paid 10 to 11 million dollars for this project that was valued at over 100 million. Just phenomenal. Bought it at 10 cents on the dollar. That's the kind of deal that all of us as investors want to buy. Now, he has very little debt against it. So because of that, he's actually looking to raise some capital to help finance and build the first couple hotels that he's going to build on site. The hotels, of course, will feed not only the park. He plans to eventually add an amusement park to it. He's got an indoor water park. Again, he's got the 2 museums, the Falls Event Center, and he plans to grow the whole concept. So let's take a quick look and we'll kind of roll through some of these PowerPoints. You can see he's got an IMAX theater that I forgot to mention. He's got 2 747s on site, Aviation Museum and a Space Museum. That particular 747 is actually sitting on top of the water park. What you do is you go inside, you take the stairway all the way up to the top, you go inside the 747, and there's 4 water slides that go all the way down to the bottom. Just phenomenal. I was in there last weekend. In fact, it was a week ago, Sunday. Steve flew me up to check out the park, and I checked it out. I was blown away with the whole complex. Amazing. Another shot there. There's a shot of the indoor water park. I don't know how they got that plane up there. Amazing. Just some shots of the indoor water park and the slides. Space Museum. They've got, I don't know how many, but I think you probably heard of the Spruce Goose, Seewing. Do you know what that is?
Yes, that's the Howard Hughes kind of deal, 100 years ago.
Correct. This particular shot here is the Blackbird, which is a very successful, expensive plane. That's the chapel. I was up there. I took some photos inside. There's the wedding chapel. And the Spruce Goose is in here somewhere. See if I can get to it in the next. There's the IMAX. There's the Spruce Goose. So the Spruce Goose, I think, was moved up there about 15 years ago or so. And it's actually housed inside. Actually, when they built the complex, they brought the Spruce Goose up and they had to build part of the complex around the Spruce Goose because it's such a big plane. I got some pictures of it when I was up there. I actually saw it when it was in Long Beach many, many years ago, but it's kind of cool to see that again. But they've got, I don't even remember the number, but they have about 60 or 70 vintage airplanes. They've got the Spruce Goose up there. They've got rockets. It's just a phenomenal amount of things that they've got up there at the site. And one of the reasons why Steve was able to get this project is because there were several bidders going after this, but their goals were to tear it apart, kind of like Wall Street, Gordon Gekko, get in there, grab the asset, sell it off individually and make a lot of money. Well, Steve said, no, I want to keep the project as a whole and I want to build onto it. I want to add to it. He actually liked the project so much, he decided that he's going to move his company headquarters from Salt Lake City to McMinnville. He's in the process of building an Even Stevens. It's a cute little town, McMinnville, and some of the little towns on the way down there were just phenomenal. As I said, I flew in. It's only about an hour from Portland Airport to McMinnville, but it was a nice drive to get out there and see the land and the sites and what he's got planned for it. So you can see a lot of the different planes that are there. Looks like it got stuck here. Give me a second. Or maybe that was the whole overview. I'm not even sure. That could have been it. So no big deal on that. Just gave you an idea of the project. Again, the project has several buildings that are tremendously large. Some of those buildings, the cost to rebuild them and the value, could be $10, $15 million for a building. And again, he got the whole project for the $10 million range, along with a lot of the planes and the rockets and all the stuff that goes inside. So just phenomenal. So what Steve had asked me to do about a week ago, right before he flew me up there, was to assist him in raising some capital. So I actually raised about $500,000 last week through 5 investors that put in $100,000 each. So the investment is simply this. It's a 1-year term, 10% interest, guaranteed, secured against the investment in the Evergreen complex. Again, valued at $110 million. He owes about $6 million on the property. So you'd have tons and tons of equity, and the interest will be paid on a monthly basis. So interest on $100,000 is, I believe, $833 a month. And at the end of the 1-year term, and I do the same thing with mine too. There's always the option, if you want to stay, you can stay, and they'll redo the term for another year. If you want to get out, no problem. they get you out, you get your money back, and of course you've gotten your interest payments throughout the year. So if anybody has any interest in that, just let Seewing know or myself, and we'll go from there, and then we can tell you about that investment a little bit more. Steve is of the opinion that if you have serious interest also, he'll fly you up there to McMinnville, fly up to Portland, and make sure you get out to the site to see what he's talking about. I've been to, as I said, probably 8 or 9 of his event centers. I've been to 5 or 6 of his Even Stevens. I've been to McMinnville. So I've seen many of his projects over the years, and I really fully believe that Steve's got a great thing going, and I believe that the value of what he's building is going to be worth 10 to 20-fold over what he's got in it right now. So that's kind of the idea. Any questions on that, Seewing, at all?
Yeah, it sounds very exciting. I love to visit museums, especially airplane museums, because I spent 20 years in the U.S. Army, retired, so I'm very into military stuff. And this is a very, very interesting project. It'll entice a lot of public the, from.
Yeah, I'm with you. And we'd love to get you up there. Obviously, you've helped me raise capital, and of course I helped Steve, and I've done a lot of my own deals over the years. But having you involved in the project, I think, is good. And it's the situation is good for Steve because he likes to take care of the people that help him. So if guys like you and me are helping him grow his vision of what's going on, there'll be a reward in it for us also. So, but just to recap. The flips, I've done over 350 flips, probably 300 plus in Vegas, over 50 in the Charlotte area. I've done about 20 or so commercial deals. I'm still doing flips in Vegas, not as many as I used to. I did as many as 7 to 8 a month about 3 to 5 years ago, but the market's changed. It's gone up a lot in price. It's a little more challenging to find them. That's the bad news. The good news is things are selling very quickly. The levels of where we're at have increased dramatically. Prices have literally doubled since about 2011 when we hit the bottom of the market. So the properties that went from 300,000 went down to 100,000 in 2011, and those 100,000 properties have gone back up to 200. They've doubled, but they're still well below the peak highs from where they were in 2007. Let's call it. So, anyways, that's kind of where we're at. So I'm doing a lot of that. Got a little feedback. Yeah, I don't know what happened there yet.
Yeah, the reception's kind of bad. I don't know what happened.
But just to
we're losing your reception. We're losing your reception, Glenn.
Yeah, I don't know what happened.
Okay, now it's a little bit better.
Yep. Something happened.
Yeah, now it's good.
No, it's still bad. So what you might have to do is just cut it off right before that started.
Yeah.
And just make a note that we had some reception issues at the end.
Yeah.
So I was just tidying it up anyway. So I think we're good.
Yeah. So far so good. You mean you presented the most important content.
Yeah.
Try to finish up if you can.
Okay. So and I don't know if you can go back and it's still echoing.
Yeah, I can hear you. I can hear you on my side.
Yeah. It's echoing sometimes. That's weird. All right. Well, I'll finish up. Hopefully you can splice it together. But to finish up, 3 concepts. One, of course, is the flips. The 10% money, I call it. You're guaranteed and secured against the investment that I buy, the flips that I buy, mostly in Vegas. I do some building, like I said, when we get into the second segment of what I'm doing, which is commercial. For folks that might have a larger chunk of money, that'd be I'd say $200,000 to $500,000 range. We've got opportunities for them to partner and to be some sort of an equity partner in the deals that I'm doing. And we're excited about that. The returns would probably end up being somewhere in the 20 to 30% range, I would think, versus the guarantee of the 10% range. And then the third, of course, is the Evergreen, the assist with Steve Downs companies, and again, the guarantee of 10% interest secured against the project that he's got up in McMinnville, Oregon. So those are the 3 avenues that I'm looking at right now. So if anybody has interest in, keeping your money busy and making a good return, let us know. And of course, we can go from there. Do you want me to give my contact info, or are you just going to give it in the presentation?
Yeah, I'll have it. I'll format the video in a newsletter, and I will put your contact information. Yeah, so yeah, basically same as before. When you present, I just send it out to my database, and if people are interested, they'll contact me initially. Then, if they're ready to go, they're serious, I will pass on them to you, so you can work with them directly.
This
Yeah.
sounds fabulous. Okay, Seewing.
Yeah, great. Sounds great. I'm very, very interested. It sounds like let me summarize this presentation for my members. Basically, Glenn again has a great track record. I trust him dearly, uh, and Glenn is have a very good core value. Is very honest, professional, and has a he's just very have good integrity, and he does a good job. Very, very knowledgeable, very analytical, and Glenn look out for his investors first and foremost before himself. So we have a good fit, and investors that are willing to put your money work with Glenn. You're gonna know that they're gonna be working very hard. Glenn will be working very hard for you, and so the few opportunities that Glenn is presenting is sounds very, very enticing. I know there's a risk with just like any other investment. There's a risk involved, but based on what I heard, and the benefit, I believe it far exceeds the risk of doing this kind of opportunities. So thank you so much, Glenn, for your time. I know you're a very, very busy man, helping a lot of investors to make money over many, many years, and we will continue to go down the same path. So thank you so much, Glenn, for presenting, and we'll go from here. Thank you so much.
Very good. Thanks again, Seewing. Always a pleasure. We'll talk to you soon.
All right, you're welcome. Thank you. Have a nice day. Bye
Yep.
bye.
Bye now.